Suppose if the company requires 10,000 shares, but the applicants have applied only for 9,000 shares. This is known as what? Under subscription. 9,000 into 3, that will be 27,000. Your narration also remains same, being application money received on 9,000 shares of rupees 3 each. Normally, as per Companies Act 2013, shares should not be issued at discount. But when they are going to issue shares at discount to their own employees, hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today I am with yet another session of this particular unit, that is Unit 2, Issue of Shares, and this is for 2nd Sem B.B.A of Mysuru University under the subject Financial Accounting and Reporting. In today's session, I am going to discuss a quite different problem, but normally all the journal entries you know already, but few changes you have to make with the journal entries because the situations are different here. Now go through the problem here. So this is under subscription. So in your previous session, I have discussed a problem where there was oversubscription. So suppose if the company requires 10,000 shares and we have received the applications on 12,000 shares, then it is known as what? Oversubscription. But here actually, suppose if the company requires 10,000 shares, but the applicants have applied only for 9,000 shares. This is known as what? Under subscription. So here the applicants are going to subscribe less than what is actually required by the company. That is known as what? Under subscription. Okay, so let us see what are the few changes you have to make in your journal entries. Now go through the question here. ABC Company Limited issued 10,000 shares of rupees 10 each payable as follows. So 3 on application, 3 on allotment, 4 on first and final call. So overall it will be rupees 10, which means issued at par. Next, the company received applications only for 9,000. How much actually we required? 10,000, but we have received applications only for 9,000, which means that under subscription. And these shares were allotted and the money duly received except on first and final call. So here also we have a situation where we have forfeiture of 400 shares. So these shares were forfeited and reissued to RAM as fully paid up at rupees 9 per share, which means that they are going to reissue at discount. So give journal entries in the books of the company. Okay, so let us see the solution here. The main thing you have to remember is it is a problem on under subscription and where the shares are issued at par. Other than that, all the entries are same. Now, your first entry is for receiving of application money. What is your entry? Bank account data to equity share application account. Now, which number of shares you will take? So, this 9,000 you will take because we are going to receive only on 9,000 shares. So, 9,000 into application money, 3 rupees. So, 9,000 into 3, that will be 27,000. Your narration also remains same, being application money received on 9,000 shares of rupees 3 each. Now, next is transfer entry. Equity share application account data to equity share capital account, being application money transferred with the same amount, that is 27,000. Now, coming to the next entry, allotment money due. Since here the allotment is not done on premium, so you are going to take the par entry only. So, what is the entry? Equity share allotment account data to equity share capital account. Now, here also you are going to take this 9,000. Throughout the problem, you are going to take this 9,000 because we have not received on 10,000 shares. So, 9,000 into 3 rupees. So, here also 27,000. We have received all the amount on allotment stage. Your entry, bank account data to equity share allotment account. So, we have received full amount on allotment. So, full 27,000. Now, coming to your first and final call. Equity share first and final call account data to equity share capital account. So, what is the due amount? So, 9,000 into, so your due amount on first and final call is 4 rupees. 9,000 into 4. But coming to your receive entry, how many shareholders they have not paid? 400 shareholders they have not paid. So 9,000 minus 400, it will be 8,600. Only 8,600 shareholders have paid their first and final call money. So how do you write the amount? Bank account data to equity share first and final call 8,600 into 4. correct? So 8,600 into 4, that would be 34,400, which means that, so how many shareholders have not paid? So out of 9,000, 400 shareholders have not paid, which means that only 8,600 shareholders have paid their first and final call money. Now, this 400 shareholders who have not paid, we are going to forfeit those shares. So, what is the entry? Share capital account data to forfeited shares account. On which stage they did not give? To share first and final call account. So, what is the full value of share? 10 rupees. 400 into 10. So, out of 10 rupees, 4 rupees they have not received on first and final call, which means that they have received 6 rupees. So, 6. So, 400 into 10, 4,000. 400 into 6, what we have received? 2,400. 400 into 4, what we have not received? So, 1,600. Your narration being 400 shares forfeited for not paying first and final call money. Now, again that 400 shares we are going to reissue. So, reissue at what price? 9 rupees, which means that discount. So, 1 rupee is discount. So, what is your entry for reissue? Bank account data, forfeited shares account data to share capital account. So, 400 into 9, we are going to reissue at 9 rupees and 1 rupee is discount. The full value of share is 10 rupees. So, 400 into 9, 3,600, 400 into 1, 400, 400 into 10, 4,000. Narration being 400 shares reissued at a discount of rupees 1, or you can write it as being 400 shares reissued at rupees 9 each. Last entry, you are going to transfer your forfeited shares to capital reserve. So, what is your entry? Forfeited shares account data to capital reserve account. So, if you see this 7th entry, here under forfeited shares account we have 2,400. And the 8th entry here it is 400. So, 2,400 minus 400, remaining amount, that is 2,000, will be transferred to where? Capital reserve. So, hope you are clear about this problem. Only the thing is that you have to take the number of shares where we have actually received. Okay, so that you have to be careful. Other than that, all the entries were same. Now, come to the next problem, and it is also a different situation where the shares are issued at discount. Normally, as per Companies Act 2013, shares should not be issued at discount. But when they are going to issue shares at discount to their own employees, okay, so which is called as what? Buyback of shares. So, shares which is being issued to their employees as a compensation or as appreciation, okay. So, then the shares will be issued at discount to its own employees and they'll become the shareholders of the company, okay. So, let us see a question here when the shares are issued at discount. So, what would be your entry? So, Arushi Computers Limited issued 10,000 equity shares of rupees how much? 100 each at 10% discount. The net amount as follows. So, there is a 10% discount here, 20 per share on application, 30, that is 40 minus 10 discount per share on allotment and 40 per share on first and final call. So, if you add 20 plus 30 plus 40, so it will be 90 rupees, which means that 100 rupees share which is being issued at rupees 90, 10 rupees is discount. A shareholder holding 200 shares did not pay the final call. His shares were forfeited. Here also we have 200 shares which has to be forfeited. All these shares were reissued to Mr. Ramesh at rupees 75. Again, it has been reissued at discount, so which has to be transferred to forfeited shares account. Give journal entries in the books of the company. Okay, so let us see the entries here. So, first entry remains same, bank account data to equity share application account. What is the number of shares? 10,000. Application money 20 rupees. So, this will be 2 lakh. Next, transfer entry, equity share application account data to equity share capital account with the same amount 10,000 into 20, that is 2 lakh. Now, come to the allotment stage where we have discount. So, extra entry you have to record here. So, your entry will be equity share allotment account data, discount on issue of shares account to equity share capital account. So, at what price they are allotted? 30. Where out of this 30, we have 10 discount also. Okay. So, 30, then 10, then the amount will be 40. Okay, so how do we record? So share allotment account 10,000 into 30, discount on issue of share 10,000 into 10, to equity share capital account 10,000 into 40. So that will be 3 lakh, 1 lakh and 4 lakh. So your narration will be being allotment money due on 10,000 shares of rupees 30 per share after adjusting discount. Now come to the receive entry, bank account data to equity share allotment account. How much we have actually received? So we are going to receive how much? 3 lakh. So leave the discount. So amount received is how much? 3 lakh. Now come to first and final call, equity share first and final call account data to equity share capital account. Number of shares is how much? 10,000 and call money is 40 rupees. No change in this. So 10,000 into 40, that will be 4 lakh. Now coming to your receive entry, bank account data to equity share first and final call. Out of 10,000 shareholders, how many shareholders have not paid their first and final call money? Let us go through the question here. So 200 shareholders, they have not paid. So 10,000 minus 200, so this will be 9,800, which means that we are going to receive only on 9,800 shareholders of first and final call money. Okay. So bank account data to equity share first and final call account 9,800 and call amount is 40 rupees. So this will be 3,92,000. Now whatever the shareholders who have not paid, that is 200 shareholders, so we have to forfeit those shares. So your entry will be equity share capital account data. Now we have a discount also. So when you take the full amount, it is 100 rupees, correct? But 10 rupees we have to take the discount also. Then to forfeited shares account to equity share first and final call account. This is an extra entry here for forfeiture. Okay, so equity share capital account 200 into 100, that is 20,000. So discount was how much under this 200 share? 10 rupees was discount. 200 into 100, that is 2,000. So how much amount we have not received? 40 rupees we have not received, which means that 10 rupees we have a discount here. So 40 plus 10, 50. Remaining is how much? 50 rupees. So forfeited shares account 50 rupees we have received, that is 10,000. And to share first and final call, that is 200 into 40, that is 8,000. Narration, being 200 shares forfeited for not paying first and final call money. Okay, so hope you are clear. This is an extra entry what you have to record, because overall it should be 100 rupees, correct? So where how much we had not received on first and final call? 40 rupees. 10 rupees is discount. So remaining how much? We have received 50 rupees. So overall it should be rupees 100. Clear? So this is your forfeiture. Next, reissue. So at what price they are going to reissue? At 75 rupees. 25 rupees is what? Discount. So your entry will be bank account data, forfeited shares account data to share capital account. So we are going to reissue that 200 shares at rupees 75. So 200 into 75, forfeited shares account 200 into 25, to share capital account 200 into 100. Okay, so you will get the amount there. Next, your last entry is for transfer of forfeited shares to capital reserve. So what is your entry? Forfeited shares account data to capital reserve account, being forfeited shares transferred to capital reserve. So how much was there in your forfeited shares here? That is 10,000. 10,000 minus in the next entry forfeited shares 5,000. So 10,000 minus 5,000. So this 5,000 should be transferred to capital reserve. So only the entry was different was regarding your discount. Okay. So in your allotment stage, you have to take that entry, allotment money due, where you have to include that discount. Other than that, you have to take discount here, that is under forfeiture. Okay. Other than that, all the entries were same, where you usually record the entries, 9 journal entries. So hope you are clear when the shares are issued at discount. So normally I have told you shares will not be issued at discount. Okay. So when they are going to issue the shares to their employees as a compensation or as appreciation, then the shares will be issued at discount, or else as per Companies Act 2013, so no shares has to be issued at discount. So it should be either issued at par or at premium. So hope you are clear about this problem. Yes. So my dear students, hope you have understood today's session. See you all in my next session with a new concept. Till then, take care. Thank you.